Security tokens are taking illiquid assets like commercial real estate and creating a brand new liquidity premium by exposing the ownership of these assets to an entirely new frontier of capital. So, a new frontier of capital, what does that mean? Essentially, all that means is an increased investment pool. There are more investors that are going to be exposed and have the ability to pour their money into this asset. You know, tokenized securities, this having this vehicle be backed and built on blockchain is essentially allowing for a brand new portal to open and flood money that was, initially not able to be received on these assets, will now be able to, in a very efficient and optimized manner, pour into these assets. This is exposure that these assets have really not before seen, and it is really important to understand that this isn't taking anything away from these assets. All it's doing is literally adding, an entire new pool of investors who might want to pour their money into your asset, and it's just giving that ability, it's giving your asset the ability for that to happen. Additionally, other value adds, rapid settlement of transactions and dealings is introduced thanks to quicker and cheaper transactions enabled by blockchain. Another big one is the concept of direct ownership and direct listings, which we'll get into in a bit. But it's really important to understand that that is going to put an end to many frictions that come with proxy ownership, which is what people really traditionally have with traditional securities and stocks. More value adds, more reliable and accurate information, the immutability of information. This leads to less errors and processing and voidances in dealings. Compliance is programmable. In a security token platform, a smart contract could potentially set forth the automatic procedures and processes for executing a transaction. Smart contracts can be used to facilitate payments, dividends, corporate actions, voting, notices, investors' tax statuses. So it's really just introducing this new ecosystem that is managing all of these necessary components in a much more public, much more transparent, and much more efficient manner. Really, it's just a better investor management. If you're still awake and online with us, please take a sec to hit like and maybe even subscribe. This is really going to help us in our beginning stages with Crypto College. Thank you. All right, who was that guy? So we've prepared some interesting key points for you and quotes to just really help understand and get excited about the space a little bit more. So here's a quote from Robert Greifeld, former chairman and CEO of NASDAQ. Robert said, 100% of the stocks and bonds trading on Wall Street today could be tokenized, and in 5 years, 100% of the stocks and bonds on Wall Street will be tokenized. So that's very exciting to hear a quote of that stature from a man of that power and experience. Aspen Coin, you may have heard of. The St. Regis Hotel in Aspen is currently publicized as the first successfully tokenized building in America, where they tokenized roughly 19% of their Grand Ski Resort. Aspen Coin raised $18 million through tokenization by issuing 18 million tokens at $1 each. Exciting stuff. Here's a quote from Dave Hendricks, CEO of Vertalo, which is a blockchain cap table management platform. Dave is quoted saying, "The era of paper-based certificates, which are owned by proxy, is coming to an end. We are now entering the era of direct ownership and direct listings." Dave goes further to say, companies above $1 billion valuation can IPO. Companies below $100 million valuation can get acquired. But in between, there exists an abundance of very valuable companies between 100 million and a billion unable to IPO. Blockchain is enabling the ability for companies to issue direct listings of equity onto exchanges, in turn creating vast new liquidity. To close out, we've got some future implications we like to discuss always. What is the future of this technology? Where might this end up taking us 5, 10, 20 years? So first, we want to start with some risks. It's important to be realistic, guys. Understand that we are not just super crypto optimists. We are businessmen first, and we really try to stay realistic with everything. So those developing policy should determine the legal and other requirements applicable to a security token or security token platform based on the functions it performs and the risks it poses. These risks include custody risk, principal risk, and operational risk. In our opinion, compliance will be the biggest hurdle security tokens will need to overcome. As for some positive future implications, this technology can bring vast liquidity to assets that were previously illiquid. We're really trying to make that clear. We might see a major shift in the business of lending professionals and the recapitalization of real estate, as debt elimination can now occur on great scale due to fractionalized ownership being a newfound and efficient way to raise capital. We should begin to see much more interaction for smaller businesses and individuals on a global scale in the investment world, now that they will be able to participate in equity markets much more easily. Finally, we will see a true evolution of capital markets, capital formation, and capital management through eliminating exorbitant high-cost middlemen and bringing back power and capital to the primary participants of dealings, being the owners of great assets and the investors that choose to invest in those assets. If this video helped you guys, give us a like, comment, any feedback or questions, and subscribe to Crypto College for more good information. Thank you for watching this video today. We really hope you enjoyed. We've hoping that you're interested. We've got a lot more where this came from, and we're just getting started. See ya.